following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the April 4th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 8 o'clock in the morning. That's right, 8 o'clock in the morning. If you're listening in on the normal hour of 1 to 2, this show is being recorded at 8 a.m. So all the facts, data, statistics, information that I provide is what's going on inside the markets between 8 and 9 a.m. I want you to know, for those of you that are early birds, that I'm absolutely grateful for your presence here. Even if you're listening on the tape show, I'm grateful for your presence here. Now, here's the key. I'm here to serve you. So feel free to give us a call, 877-927-6648. We can share a cup of coffee together, although I don't drink coffee, but we can still share one. If you don't call in, but you'd like to, and you can't, well, then let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 100, well, that was a NASDAQ. The Dow, 445 points. Now, the average true range of the Dow equity futures is 540 points. We're down as much as 540 points, maybe even a bit below that, but the average true range, 540. What we're seeing take place, at least as of 8:08 in the morning, nothing more than the new normal. NASDAQ futures off 106 points. Their average true range, when I refer to average true range, it's the price range during the last 10 days. So during the last 2 weeks worth of trading out here. That average true range is 177 points. We're only down 108 right now. The S&P off 37 points. Its average true range, 54. And the Russell 2000, she's off 19 points. Its average true range, $29. So don't let the numbers really scare you. Or let's frame it this way. If you were trading the stock in, well, let's just do this here. Let's do a real actual equity. Let's just say you were trading Apple today. You were trading it yesterday. It's going to take it. And you wanted to know what just the average daily movement was over the last 10 days. I can tell you it's $4.41. That means it's just average to move $4.41 to the upside, to the downside, whatever side. That is the average. Now, in life, if you look for average results, what are you going to get? You're going to get worse than average, right? We are about being extraordinary out here. That means if you were going to trade Apple stock today, if you were going to put in a stop, you need to be outside of the average daily true range. That would be 441. Typically, you multiply that times some type of Fibonacci expansion. Maybe the 1.272, maybe the 1.618. What Stevie will share with you is in volatile markets, make your stop wider. All that really means is you're going to be trading fewer shares because the entire gamut, the entire secret to being able to stay in this game, whether you're on the right side or the wrong side, is to protect your capital. And the easiest way to do that is through proper position sizing. It means you determine your risk before you enter a trade. It typically should be 1% of your trading capital. Once you know that, then you know how many shares to buy, because you're going to take that dollar amount, and let's just say it's on a $100,000 balance. 1% is going to be what is 1% of 100,000? That's going to be $1,000. You would take $1,000 divided by your stop. If it was Apple, it'd be 441 at least. At least it's got to be more than that. I'd say 441 times 1.618, whatever that number is, $6 or so. And that would be the number of shares that you would purchase. Position sizing. That is perhaps the most important thing. If you were going to trade the Dow futures out here, in essence, you'd have to anticipate a price movement, an average price movement of 540 points. Exactly. Now, let's go get into numbers, try to figure out what the markets are communicating to you and I right now. How do we best do this? Well, let's take a look at this chart right here. This is what I included in this morning's newsletter. One of the nice things about doing the afternoon show is I don't really have to give away everything. When I say give away, I provide with everything that I can, but I'm not, in essence, reviewing the newsletter. But this morning, with the early start, we'll take a look at a number of those factors, because it really is all about the equity futures contracts and what they're doing and what they're not doing. Let's talk about what that is. On this chart, if you watch us on Tiger TV, in the very upper left-hand side, you're going to see where the equity futures are trading. You're going to see what their average true range is. But what's more important is for you and I to go take a look at the charts right now. Here's what the ES Mini has not done, is not doing as we speak right now. First of all, it has not made a lower low than just a few days ago. But more important than that, it has not taken out its swing point from February. Its swing point from February is 25.33. It's from the trading session of February 6th out there. And this may just be nothing more than just making that 100% move of a move by getting back into a prior swing point. It hasn't even touched 25.33.75. If things get worse during the trading day, let's say somebody's throwing out the baby out of the bathwater, or however that goes, then your price target should be that level. There's no A to B equals CD down pattern. There's nothing more than at this stage, at 8:13 in the morning, a good old-fashioned consolidation pattern. That's right. Price would have to close below 25.33 and 3 ticks out there in order for that to not be the case. Otherwise, we know that the top of the consolidation is basically around 27.94. So you're talking about 27.94 to 25.33. That is a big consolidation range. Let's take a look at the NQ, the one that has really been leading the charge on the way down, the one that has the most bearish of patterns that is out there. Now, when I say the NQ, what I'm going to really refer to is the NASDAQ Composite and the NDX 100. They are the ones with the most bearish patterns out there. That being said, price has still not taken out its February swing point low. The day of that low, by the way, is February 9th, different than the date of the ES Mini. And that price point is 61.90. There's no A to B equals CD to the downside. What we know is there is a very large consolidation pattern, the bottom of which would be 61.90, the top of which I would say is probably around the 70, 76 level out there. So nothing has really busted down today, different than yesterday. The markets have been just simply moving in this very large average, and I do mean average, true range. The Dow Equity Futures contract, the same pattern, hasn't taken out its lows of 23.113. And for those of you that think the Russell 2000 is the weak link, it's the strong Equity Futures contract. It's only done a 0.786 retracement level. 1490 is its number. Steve Rhodes, that's 8786, the 0.618 retracement. Hey, we'll be right back in just a few minutes. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timer's Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Again, this show, this is the Trader's Edge show. It is being taped at 8 to between 8 and 9. So if you're listening on the normal broadcast at 1 p.m., sorry that I can't take your live questions. But for those of you that are listening right now, if you want me to take a look at something, feel free to send me an email, steve@tfnn.com. Just put radio show question in that subject heading. Now, we took a look at the equity futures contracts. Let's continue on looking at the futures prices by taking a look at gold and silver. Right now, you've got gold up $11 and change. Its average true range, by the way, during the last 10 trading sessions, 16 buckaroonies. For silver, it's 28 cents, and silver is only up 7 pennies as we speak right now. Light sweet crude, as another example, its average true range over the last 10 trading sessions, $1.58. It's off 94 cents as we speak. 6 pennies, 6.5 pennies is the case for natural gas. That is basically flat out here. How about copper? Dr. Copper, about 6 pennies. It is actually down 8 cents as we speak right now. Platinum, its average true range about $15. It's off 6 as we speak. Bitcoin. The Bitcoin futures contract, the CBOE Bitcoin futures contract, its average true range is 600 buckaroonies. She's down about $420 as we speak right now. But let's go hop into gold, see what gold is doing, what it's not doing. What do we like? What do we not like out here? And we'll do that by taking a look at its market profiles. Its daily and weekly market profiles are the ones that I would be focused on the most. Now, in this case here, what we're taking a look at is the June contract. And what you will notice is that its trading range, we gave you the $16 price range. The real range, not that that's not real, that was average. We don't like average. But the real range that we're taking a look at inside of gold is this little consolidation area that right now exists between 1322 and 1362. That is the top and bottom bottom of the daily box. The center line is at 1342. So there is neither a benefit here to the bulls or the bears. Price is trading above that 1342 level. That would suggest to you and I that 1362 is the objective. If we do look at the weekly set of profiles, that's the very right-hand panel, what you're going to see is that center line, the blue line, is at 1337, much closer to the bottom of the box, says that this is a bullish structured box. With price well above 1337, this would suggest to you and I that the top of its box is also the target. It happens to be the same 1362. It's off by 10 cents, but we don't worry about 10 cents around here. If we are walking outside and there's a dime on the ground, I'll pick it up. Maybe you'll pass it by, but I'll take any free money that the universe is willing to give to me. We work hard enough for it as it is, so if you want to give me a few dollars, I'm all for it. So 1362 becomes the price target. Is that what is important with regard to gold? And I would say, well, it's one of the things that's important. What's even more importante, though, is what is gold in terms of euros doing? And what we can see right now, it's trading at about 1,100 euros. If you want to get a nice 1 ounce maple leaf, Krugerrand, whatever type of coin it is that you want to get, well, your Euro land, you're going to pay about $1,100 plus the premium. In U.S. land, you're going to pay $1,350. Look, you and I look at a screen of gold priced in dollars. We forget that there's traders overseas that are trading gold in euros. And if price is going up in dollars and it's going down in euros, you're not going to find those folks in euros wanting to buy gold. They would be selling gold. There's your buyers, there's your sellers. However, in this case, as we speak right now, you've got gold priced in euros and gold priced in dollars moving higher as of 8:22 in the morning. The real key level, and you can see it here by watching the bottom or looking at the bottom portion of our screen, is that gold priced in euros formed a formidable top on October the 16th, 2017. That's right. We are now in April of 2018. What is that? That is October, November, December, January, February, March, April. It's 6 to 7 months, almost 7 months, that gold trading in euros has basically just been trading sideways-ish, has been unable to take out a resistance level. You ask, what's that resistance level? Well, it's 110770. So if gold is able to break above, close above 110770, well, that sets up its next move to its next hurdle. And that would be $1127. You may say, hey, that $20 is really not that much. Well, above that, it's 1148, and then above that, it's 1215. What I would share with you is busting above 110770. If you happen to be a trader who's trading gold futures and you're taking a look at gold priced in euros and you see it close above 110770, that is going to generate a momentum breakout signal. And that should then take gold priced in dollars higher. And if we see gold close above its daily and its weekly profile level, you can put on the party hats. You can put out the streamers, because gold will stream to the upside out there. That will be the real breakout. Are we going to get there? I don't know. Should you take any action this morning? Absolutely, positively not. I don't see any reason to do so. Let the market prove itself to you out there. So gold looks pretty good. Looks like it's headed higher in dollars and euros. Let's see what happens when it gets to that 110770 area. With regard to silver out here, if we take a look at it, we could go back and take a look at its set of profiles as well. So why don't we do that out here? We'll see what kind of support or resistance it's dealing with. If we look at its daily time frame chart, we can see that 1669 would be a resistance level. You're trading at 1649 right now. For me, in high-ho silver, the real key level is 1682. In 1682, I don't actually know what happened, but what I do know is that at 1682, to be exact, 16.828, that is where silver has found resistance, substantial resistance for several months. That is the bottom of its weekly profile. So if you see silver close above 1682, then what you should see is not only price head up to $17 and a penny, And that would be the center of its weekly box, but very likely 1756. So how do you take a look at this? Big opportunity here. If you see gold breaking out, both in dollars and euros, well, silver ought to tag along. And if silver's trading above 1682, your target should become $17.56. And that is what's going on inside of the metals market. If we take a look at what's going on inside of, let's just say, the GDX as we speak right now, the GDX trading out at 22.24. Let's go see where that is taking us to. Yesterday, the GDX did 100,000 shares. It closed at 21.91. Again, in the pre-market, we're looking at about 22.24. So at 22.24, where does that take us? Well, the swing point from March 26, the low is 22.26, and the high is 22.51. 44 million shares. I don't know what, there's a million, I gave you the wrong volume. The volume of the GDX yesterday was 32 million shares. So far this morning, it's been 100,000. So not much in the way of volume out here. If we take a look at its set of profiles, now, you know that the GDX, well, maybe you don't know, but if gold is really breaking out to the upside, the GDX is going to outperform gold's move. What I mean by that is its rate of change. The rate of change is going to be accelerating inside of the mining equities, anywhere between 2 and 3 to 1 to maybe even 5 to 1. The larger, the better. The larger the rate of change differential between the mining equities and gold, the stronger the breakout really is. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. It's 8:30 in the morning, so those of you listening on the 1 o'clock show, this show was taped earlier this morning, and tomorrow we'll be back to the normal schedule out there. This morning, what are we taking a look at with regard to the futures? They're trading lower based upon supposedly the tariff battle language going back and forth out there. That's not as important right now. What's more important is for you and I to try to read the patterns inside the market, try to anticipate what the markets are going to do. So I would say that the ES Mini is one of the charts for us to focus on and pay attention to. If we take a look at its set of profiles, these are the charts that are up on your screen right now. You've got 4 or 5 different time frames, I should say. You've got the 30-minute chart on the very left-hand panel. Then you've got the 2-hour chart, the 120-minute. Then the 4-hour chart, 240-minute, daily and weekly. Now, as we take a look at this going from right to left, we'll see that price on the weekly. We already covered both the daily and the weekly in essence. That price has not busted out its previous February swing point low. So at this stage here, it's nothing more than just a 100% movable move back to an important swing point. Hasn't been busted out. If it gets busted out, it has a whole different meaning. That would actually or could set up or should set up an A to B equals CD to the downside. Are we there yet? Absolutely, positively not. Here's what it would look like if, in fact, price were I almost got to grab the actual right swing point so that I give you a really solid number out here. I did it again. What is it? What is it about this mouse out here? Let's see if that works. Does that work? There we go. There's your A point, which, by the way, this is a weekly chart that I'm doing it on, which was the January 29th high. Your B point in this, if, in fact, price were to take out the February 5th low out here, then you'd have a retracement. That retracement was up into the level on the week that began March the 12th. That would give you a 1-to-1 price projection. Let's go ahead and expand this out. That would go ahead and give you a 1-to-1 price projection down to about 24.57. 1 to 1.272, 23.62. Are we there yet? The answer is no. Is it a potential problem? Yeah, of course it's a potential problem. But breaking through those lows of February is going to be tough to do. It should be tough to do. Thus far, it's proven to be tough to do. On the daily set of profiles, price is trading below the bottom of its box. Same thing on the weekly. So you and I can't go searching for any kind of support there. The only support you and I can find is that swing point low. If we go down into the 240-minute chart, that's right dead center. That is the center panel that you're looking at. What we can see is 25.6275 is a support level. Now, real resistance out here looks like 25.95 area. But 25.62, if we see it close below that, that would signal to me that prices are going to head lower. Duh. What I mean by that is you'd be breaking through about the best level of support that I can find out here. That would then say, now the target could or should be that February low. And one of the reasons that I conclude that would be taking a look at this 240-minute time frame chart. And then this 240-minute time frame chart, and this occurred yesterday, and these are a couple of the, this is one of the patterns that confirmed yesterday, which you know the markets like to sing in the key of G. It is the Stevie Wonder key of G. That is the wave number 7. And for those of you that are part of the Basil Chapman or went to his workshop last night, you know how important these different wave counts. I know, yes, last night was focused on that 4th wave, letter D. Well, you and I also know that these markets, for reasons we cannot determine, can find bottoms or tops at wave number 7, which is exactly what took place inside of the ES Mini back as the close came in. This was a couple of days ago. What was this, April the 3rd? I hate when it gives me that message, especially when I try to give the information. But it was April the 2nd. So April, and price was moving lower, doing less relative energy. Now, the reason why this pattern here is not effectuated, is that a right word? Is that a proper word? Is simply because we have not seen any kind of bullish reversal candle on the 240-minute time frame. When we take a look at this, you've got one potential significant bottoming pattern that is still valid. And we know we've got a market profile that's just above the bottom of that 7th wave move out here. Does that mean you jump in and you buy this? No, we're just looking for clues as we speak right now at 8:30 in the morning. And if we try to figure out the clues coming from the daily and the weekly charts, well, there is another clue. And that next clue out here is that price also on the larger time frame has been moving lower with less relative energy. We know that is how markets make tops, and that is how markets make bottoms. In the case of the ES Mini, if this was going to be a big turnaround day, and I'm not saying it is, if it turns around, what it would need to do, I'll give you both the bullish and the bearish side, because right now, I'm kind of neutral with regard to the signals. Not kind of. I am neutral with regard to the signals that the market is providing for us. I can absolutely give you the bearish case for the ES Mini, and that is this. If it continues to close below Stevie's red line, 2630, as we speak right now, then its message is bearish. You might say, why? And I would say because you have a falling price oscillator below zero. But what does that mean? When somebody, and you identify a bearish pattern in a chart or a bullish pattern, what does that mean? You have to go find levels of support. And we've already covered this ad nauseum, so to speak, and that is the February low inside the ES Mini. And until that gets busted out, it's just your garden variety consolidation, large consolidation, albeit, pattern that is out here. We know that price is trying to move lower, but it's doing it with less relative energy out here. It's Stevie's red line that is going to be the key inside the ES Mini. But we have signals on the daily that say it's trying to form a bottom. We've got a signal on the 240-minute that says it's trying to form a bottom. Will it form a bottom? I don't know. If I go take a look at the 2-hour chart out here, what's the pattern inside the 2-hour chart? Well, the only pattern that I can see inside the 2-hour chart as we speak right now is we can see that the buyers, for whatever reason, have been coming in at this bottom area. We saw that take place at 4 o'clock. That was on April the 2nd. Nice little bullish engulfing candle. We see that just at 8 o'clock this morning, just as we were coming on the air, it was the buyers that were trying to flex their muscles. Why do we say that? Because you see the formation of a hammer candle. Now, a hammer candle, much like the shooting star, and you can see a shooting star. This is where the most recent high inside on a 2-hour chart that the ES Mini formed its top. That was at 6 o'clock in the 4 o'clock in the afternoon on March the 29th. You see that shooting star? See how in the very next candle session you had follow through to the downside? Typically, the way a shooting star works is it either works or it doesn't, which means when you see follow through, price is going to go to lower prices. Where did it go to? Went to Stevie's red line. Once it broke through that, you had a falling price oscillator below zero. No reason it went to lower price. Well, at this stage here, the next 2-hour session does not take place till 10 o'clock. I do not know whether we're going to have follow through to the upside or to the downside. But a hammer candle is just telling you and I that the market is trying to find a bottom. So on a 2-hour basis, you and I can clearly see support. You see, the buyers and sellers, they can't hide. They can try to hide. But you and I, we are candlestick aficionados along with the patterns that each of us trade out here. So that is what's going on thus far. What does it mean? It means that really if we see a close below where the bulls have presented themselves, and those are the lows that we took a look at on April the 2nd, then it suggests to me, just like we looked at earlier, that price should go target the February lows out there. What's going on inside the NQ? You know, inside the NQ, if we just go take a look at its 2-hour time frame chart as well, the 2-hour time frame chart shows that it too is trying to move lower, but with less relative energy. Doesn't mean it's a bottom. I'm not saying go out and buy. Everything is pretty bearish, but price may only head to the February lows. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You got Dow futures down 118, S&P futures down 39 points as we speak right now. And by speaking right now, we're talking about 8:42 in the morning. That's right, the 1 o'clock show being taped today between 8 and 9 a.m. So all the information we're taking a look at is based on that time period. Now, yesterday, Fletch inside the Tiger's Den turned me on to the IBB. And if we take a look at that chart right now, by the way, the IBB closed at 102.90. In the pre-market, it's trading out at about 101.34. Now, we talked about hammer candles, shooting star candles earlier. And what's really cool about the pattern inside the IBB, you're going to learn a lot today with regard to this, because this may be, for those of you looking for a trade out here, this may be a nice trade setup. And here's what we know. We know that there's a couple of swing points out here that the IBB was testing yesterday. One of those swing points was back on the trading session of November 14th, 2017. That was 6.2 million shares. That level was tested yesterday with guess how much volume? Well, those of you looking at my screen, you know the answer, 2.6 million shares. You want to talk about a light volume test of a swing point, and then it completed and formed a hammer candle. Now, there's 4 different types of hammer candles out there. Class 1 would be the strongest. This happens to be a Class 4. Nonetheless, it's a hammer candle. It tells you the market was trying to bottom or is trying to bottom out a bottom out here, trying to hammer out a bottom. The second swing point, perhaps more important than the one from November 14th, is the swing point from the trading session of February 9th. That had 7.9 million shares. So the IBB came back with 2.6 million shares, tested it, rejected it. Did price get all the way down to the swing point in November? Did it get down to, what was it, 100.68? No, but we're in that range. It was testing it. It's on light volume, and yesterday was a hammer. I said that in the pre-market, we are trading above the bottom of that hammer candle. Again, 101.34. Well, what you and I also know is if you close below the low of a hammer candle, the expression is if you're long, you're wrong out here. And that's what's going to be cool inside the IBB to give you some type of clue. If we go further back on the left-hand side of the chart for the IBB, you're also going to see a swing point. And this was a swing point from August 21st, 2007. Now, that had volume of 1.7 million shares out there, but still trading into it. The two most prior swing points have been tested on lighter volume. And then we go back a little bit further to the left-hand side, and you're going to see that the IBB began a little breakout dance. That was around June the 20th, had nice volume, 11 million shares coming in. The next day, 15 million shares. So the IBB, the biotech sector inside of the NASDAQ, looks to me, looks to you, looks like to everyone, it's trying to form that bottom. Nonetheless, if we see a close below, let's give it the figure of the lowest low. That should be 100.86. What is it? Let's give you the right number out here. 100.68. That's the number. If you see a close below that, which would certainly be below yesterday's low, it doesn't matter if the market was trying to hammer out a bottom. It would say price starts coming back into that little breakout area from all the way back in June of 2017. And the price target there would be 96.83. But as we speak today, as we speak right now, at 8:45 in the morning, this looks pretty good out here that it has formed a bottom. See how it trades during the day. And if you're listening in at 1 o'clock in the afternoon, that may be a trade setup for you to go ahead and take. If the market is doing poorly, the IBB is holding up, that will make you say, or should make you say, something to think about. Now, I saw that one of our denners, Maria, and rightfully so, posted some information in the den and just kind of jogged something in my head, which was, hey, what are the overseas markets doing? So I think it was about 3 or 4 o'clock this morning when the news started coming out about the tariff. What are we going to call it? The language war that is going on as we speak right now. Who knows what the real deal is going to be? But if we take a look at the DAX, see how it is holding up as we speak. By the way, if we take a look at the DAX, always good to get a look at the larger picture out here. So here's the monthly chart for the DAX. We know the DAX here had broken through a consolidation, about a 6,000 point consolidation. It broke through that level back in May of 2013. Has a price projection there of 14,129. It's actually gotten up to a high, not too far away, but it got up to 13,596. So, pretty darn close. Is it complete? I don't know. Here's what I do know. Price hasn't even broken through its trend line. The current trend line we're talking about is from February 2016. That could be a support level. If we take a look at the rising price channel, going back even further on a long-term basis, inside of the DAX out here, if price were to break below that trend line, that's a trend line that starts from the bottom. Nice hammer candle, by the way, in February of 2016. Your next touch point is low from June of 2016, then July of 2016. Price still hasn't come down to that level. But I would say if price closes below that, then it opens up the kimono, and I do mean kimono, for price to travel all the way down to the bottom of that rising price channel out there. In fact, on a weekly basis, the next area of support would be the December 2016 because it's a nice wide-ranging bar, and you and I can learn a lot from wide-ranging bars. But as we speak right now, on a long-term basis, the DAX has not broken down. So if we go take a look at the daily time frame chart to see if it is all freaked out about what's going on between the U.S. and China as we speak right now, it's just simply trading. I don't have volume, unfortunately. It's just simply trading inside. It has not taken out the low from just 4 or 5 days ago, March 26, 2018 out here. So it's really not too shabby. Probably waiting to see what U.S. traders are going to do before it takes any further action. If we go see what's going on inside the UK out here, does it matter? Do I have any long-term panel? I don't see anything out here from a long-term perspective. It is... what is it doing? Looks like this thing has formed and completed a nice Short term, A to B equals CD to the downside. Here's the deal there. Here's a shorter term. This is the daily chart we're looking at. Here's the confirmed A to B equals CD on the daily chart. Nice bullish candle that formed on March 27. Just a small pullback. If we take a look at the pullback thus far, let's go measure it in terms of Leonardo Fibonacci. We'll go from the low out here as soon as we grab that tool. We'll go from the low out here from March 26 up to the high out here on the trading day of March 29. It is done close to a 0.618 retracement. So at this stage here, kind of normal. So the European markets at this stage of the game, they have not broken down. Will they break down further? They're probably waiting to see what's going on inside the U.S. The question is this a clue as to what's going to unfold today? I don't have the answer. But what we do know at 8:50 in the morning is things have not broken down. So if we summarize this, we take a look at perhaps one of the better opportunities today, I would say pay attention to that biotech sector inside of the NASDAQ, the IBB. I think there's even some doubles or triples that you can play there. I'm not suggesting that you do that. What I am suggesting that is if you see a trade there, make sure you use proper position sizing. Take your portfolio balance, multiply times 1%. That becomes your risk. Go ahead and divide that risk by your stop. In this case here, the average true range on IBB, 266. Multiply 266 times 1.618, and there you can create your position size. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So this show is being taped at 8 o'clock in the morning. We're now 8:54, and really, David White is not following this show. It's going to be the one and only Larry Pesavento. Now, a week from today, I'm going to be hosting a workshop for subscribers out there, and it's titled "The 5 Reasons Traders Fail to Spot Bear Markets." And nothing could be more important with the volatility and the wide-ranging average true range daily. The Dow having about a 500-point range. So nothing could be more important than being able to spot and identify a bear market. And the reason is, look, the last 3 bear markets, I believe the average decline was about 49%. It means you need to generate an 82% return for your portfolio to be indexed to the S&P, the Dow, one of the indices out there. So I'm going to show you the exact pattern that has been present before every bear market over the last 130 years. I'll show you the exact step-by-step process, the exact entry in the exact confirmation of the top, when to exit, everything. I will give you all of those elements. I'm not holding anything back. I never really do out there. And maybe a reason to consider doing it is because yesterday, Timers Digest, they began tracking my signals last March. So the very first time that they could publicly report my signals was at the end of March. And they came out with their issue yesterday, where you can see, if you watch this on TigerTV, for the S&P 500, yours truly is rated as number 1. That's number 1 for the last 12 months. That's number 1 for the last 3 months. That's number 1 for the last 6 months. Now, all this means I have to work even harder, because once you get up to that top, you like to be there. For us newsletter writers, this is kind of like our Academy Award, so to speak, a third party that is simply tracking the signals coming from our newsletter. Now, I also still maintain that number 1 position with regard to gold. So the way that I got there is the set of tools that you and I take a look at on a daily basis out here. It's not to freak out with regard to what the markets are doing. It's to step back in, take a look at patterns. And so our next guy, he is one of the key reasons why I was able to obtain that level. That was Larry Pesavento. I could not have done it without Larry or Tom or Basil or David and a number of others. And I especially could not have done it without you. So thanks so much for being here. Stay tuned. Larry's up next. Of course, if you're listening at 1, it's David who's up after that. Have a great Wednesday. I look forward to seeing you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.